All right, guys, we're going to go ahead and get started here. I want to welcome each and every one of you to our Tuesday, Thursday business and professional sessions that we're doing as a response to the COVID-19 pandemic and assistance to try to help our chamber members. My name is Kevin Riles. I am on the board of the Fort Bend Chamber of Commerce. I am also the division chair for our business and professional division, which essentially does usually monthly lunch and learns in a normal sense, but we have converted and adapted to this new environment that we're in. And so we're doing bi-weekly sessions on just trying to give you resources and assistance in these times. And so I'm a commercial real estate broker here in the Fort Bend market, and I know my business has been affected definitely. And I was just talking offline or before we started with Jevaughn about some of the deals that I'm working on and some of the refocusing of banks to this particular CARES Act and PPP loans and things of that nature. So I just want to thank each and every one of you. For those of you that are looking out on Facebook, we thank you for joining us on Facebook as well. I'd ask that you start watch parties. And you know, if you click on, you can start a watch party and share with your friends, so we can try to disseminate this information. We have really some really good experts today, both from the banking world and the CPA world, that can answer your questions. And so I would just encourage you to share this out to your friends so that we can get this information out. It will be available on the Chamber's website within the next 24 to 48 hours. We are recording this both on Facebook and will be available on our YouTube channel as well. So again, just trying to get this information out. For those of you that are joining us via Zoom and or Facebook, if you have questions as we go through this, I would just ask that you type those questions in the chat and address it to the panelists, and I can handle that. I'm going to moderate today. You can do that. You can also raise your hand by clicking on at the very bottom. You'll see a opportunity to raise your hand. However, what I would prefer that you do is there's a Q&A button at the very bottom. If you can type your questions in the Q&A, that allows for us just to make sure that we don't miss anybody's question, and we can kind of check them off as we go. For those of you joining us for the first time, this is part 2 of the CARES Act. We did part 1 literally on the day and at the time that the act was being signed and released. And so we decided to do on that particular webinar, part 2 mid-webinar, because there were things that needed to be cleared up. And so we felt like by April 14th, we'd have a little bit of more clarity as to some of the questions that came up. And I think that's the case based on looking at the PowerPoint. And so for those of you out there that have questions, again, I just encourage you to ask questions. So with that being said, I'm going to share my screen here. And as I used to say in my old IT days, excuse that, that was user error. All right, you guys can see? Can y'all see the slides?
Yeah. Yes, yes we can.
All right, the CARES Act update, part 2, April 14th, from noon to 1. We'll be respectful of your time and try to stick to that 1 o'clock or just over 1 o'clock time frame. The questions the topics that we plan to discuss today, our expert panel is, does the 100K limit of compensation apply to benefits? What if I am self-employed or a nonprofit organization? Data certification, who's responsible for accuracy? How do the affiliation rules apply? Reports to submit when using a PEO to process payroll. And then finally, clearing up the confusion on independent contractors. Joining us today, we have Dickey, who's a CPA with DRDA. We have Michael O'Neal, who's also a CPA and partner with DRDA. And then we have Jevaughn Sterling with Amegy Bank. And we have Jonathan, who I'm hoping is with us, from Frost Bank as well, and also serves as our chamber chairperson for this year, this 2020 year. So he's been thrust into a leadership position in a very interesting time, and we are glad to lean on his expertise as well. And again, my name is Kevin Riles with Kevin Riles Commercial, and I'm your business and professional division chair. So with that being said, again, here are the topics that we plan to discuss. If you have questions, feel free to type those in the Q&A. Some of you probably logged on already with questions in your mind. If they're related to the topics, great. If not, feel free to ask them as well. And so I'm gonna go ahead and open it up to the panel and get to this first slide, the SBA disaster assistance in response to the corona virus. And so I don't know if anyone wants to take that specific slide.
I think you might want to go back to the first slide because it kind of covers the significant points we're going to talk about. This was thrown in later as the EIDL discussion. So let's go back to these are the topics that were the main points of discussion. So Jevaughn, you want to start off?
Yeah, thanks, Mickey. Good afternoon, everyone. Thanks for tuning in. And it's been about a week since the PPP program has gone live. Amegy Bank has been participating in the program, and we've started to experience enough applications. We're getting a handle on some of the documentation requirements and some of the rules and guidelines. So I'll be happy to take the first question. Does the 100,000 limit on comp apply to benefits? So SBA has come out with clarification on this topic, which allows an employee whose compensation exceeds $100,000 to include the amount of the benefits that they receive above the $100,000 limit to be included in the payroll calculation. It was previously thought that benefits could only accrue up to $100,000. Now, it's also important to keep in mind that the benefits that are able to be claimed include the employer portion of 401k. 401ks are limited just statutorily, and so there's a limit based on the 401k guideline. So it's very unlikely that you're going to see $100,000 of compensation or employer paid 401k contribution for each employee. You've got health benefits and dental benefits, vision, other health and welfare benefits. The employer portion that can be counted in the payroll calculation is not limited to the $100,000 cap.
Yeah, one significant area, Jevaughn, is that I've seen for people who have defined benefit plans, we could have significantly greater amounts of contributions that you would have with a 401k plan. So $100,000 has been just compensation, cash compensation to that. If they make 150, then only 100,000 is considered as far as their annual comp. But they could also have, as you said, health premiums or qualified retirement plans that could sometimes bring them up to $200,000, $250,000 on an annual basis, and that's still allowed to be able to be taken into consideration for the 2.5 monthly benefit.
One of the key issues we're dealing with for making these applications are what is the amount of the 2019 profit sharing contribution or the pension contribution. As you know, most people that are self-employed haven't calculated that if they have a Schedule C or a partnership. And so we're suggesting, assuming their comp or overall benefits are going up, that they use the amount from the 18 tax return and use that as the estimate. Otherwise, there's no real way to include that in the payroll base.
So as far as the second question, what if I'm self-employed or a nonprofit organization? Who'd like to take that?
I'll start off. This is Mickey. The self-employed can include their own self-employment earnings. Again, the complicating factor here is most people have not filed a tax return for 2019, since 2019 is the base period. So what do you do and how do you document this information? And this will go to the third question as well. Generally, we're suggesting, and I think most banks are accepting, a financial statement out of the company's QuickBooks file, as long as it's in pretty good shape, or for the partnership. Those partnership returns are generally not filed as well. As everybody knows, returns have been extended to July 15th. Those people have not filed the 19 return, so they're having to prepare financial statements to present to the banks as support for this loan process. Likewise, the question about nonprofit entities. Generally, 501c3 organizations are eligible for this type of a loan. Usually they're not eligible for SBA loans, but in this case they are, as long as they're religious, charitable, scientific, literary. That then excludes a 501c6 trade association. And generally these loans are limited to entities with 500 or fewer employees. This is one place that's exempt. For instance, some churches might have more than 500 employees, and they might be eligible. So those are the two issues relative to point two. Does anybody have any more they want to contribute to that?
I have a question. So I have a subchapter, as I'm assuming others out there. So I pay myself a salary, and then obviously if I have profit, it rolls over into my, and so determining when I'm looking at, if I was applying for the loan, am I just looking at my W-2 self-employment income, or am I looking at that plus what possibly profit rolls over into my, for self-employment tax?
You said from a subchapter S corporation?
Yeah.
Well, the net earnings that flow through to you from a sub S are not self-employment. They're not qualified as self-employment earnings. So in that scenario, it would only be your wages.
Wages, okay.
And you'd have issues relative to some people that don't take substantial wages out on a sub S corporation. They'll be severely limited in this calculation.
Gotcha. Gotcha.
Jevaughn, have y'all been underwriting them that way? I mean, we've used the traditional benchmarks of partnerships, perhaps being self-employment earnings, so they're subject to SC tax as well as income tax. S corporations aren't. Is that how Amegy is handling this as well?
Jevaughn, can you hear us? He looks frozen.
Yeah, screen may be frozen. Looks like Jonathan's on hold as well. Those are the traditional answers to is self-employment earnings, and the idea here was to reimburse earnings from self-employment, right, with the Triple P program. So I don't know if lenders had any different interpretations, so if they come back on, we may ask them that question as well.
Hey, Jonathan, can you hear us? All right, we have it. Hey, Jevaughn and Jonathan, if you guys want to leave the meeting and come back in, then we can take it from there. So for those of you that are joining us online, if you have questions, please feel free to type those questions in either the chat or preferably the Q&A as well. And I see our illustrious leader has a question. I'm gonna wait, Carrie, for the banks to get back on. Jonathan, I see you, but I'm not able to hear you, unfortunately. So you may want to call in with the phone number and join audio by phone if you want to try that. So I guess I can ask this to Mickey and Doug while we kind of wait for them to rejoin us. Carrie mentioned that she is hearing that folks are having a hard time getting through to their banks to apply for the PPP. And I know our bankers would normally ask this, but any advice you guys want to give them as far as trying to get in line with their banks, Doug or Mickey?
Well, the SBA has printed out a basic application form for the PPP, and if they can't get to their bank to get the bank's application form, I fill that one out. I think it's 2483 or something like that. You can get it on the internet pretty easily by doing a search for the SBA PPP application.
Okay. Okay. And
Yeah.
Go ahead, Doug.
Sure. Mickey's 100% right. I mean, get your information together It's going to take information to support what your 2019 wages are. It's going to be the 941s on a quarterly basis, 940 on an annual basis, and W-2s or W-3. You gather that information along with the benefits that Jevaughn had discussed earlier, and fill out the form as Mickey indicated. That's really what they're going to need. And so as far as getting through to a banker, get there and get there as quickly as you can. The SBA issued information yesterday that they've already about over 60% subscribed to the PPP program. And so as far as applications that have gone through their process, there's less than 40% of the initial $350 billion in funding remaining. Congress is continuing to talk about putting another $250 billion into this program, but the anticipation by the SBA is that these funds will be extinguished by the end of the week. So it is paramount that you get your information together and get it to a lender as quickly as you possibly can.
Gotcha. And I'll take this question because it's dealing with while we try to wait to see if they can get back in. Cheryl asked, she's trying to understand, she's a self-employed realtor with a S Corp, but receives a 1099 from Keller Williams. What all can I apply for and what documentation do I need?
That's a good question. Most realtors are getting 1099s that might come to their personal name and social security number, but many of them file their return by applying that over to a sub-S through a nominee distribution. So the question is, have you not filed your 2019 tax return? So that might be one area where they want to leave that 1099 on their Schedule C, especially if it's substantial, and it usually is for a residential or a commercial real estate broker. I might use that 1099 as my support for my self-employment earnings. What do you think about that, Doug?
Yes, it would certainly increase the amount that you would qualify for the program. You just have to take a look and see if that outweighs the tax costs that would be associated with recording it and paying full self-employment tax on all the earnings. There's no free lunch here. So if you make a choice one way or the other, there will be consequences.
That's a good point. And that kind of goes to the next question on the certification that you have to fill out on the application form. Who's responsible for the accuracy? We've had several clients say we don't have to be real concerned about the accuracy of the information because the banks will check it out and the responsibility will fall on them. Well, it's not the bank's responsibility. The lender is not responsible for the accuracy of the data. These are SBA collateralized loans, and the applicant is responsible for certifying that the information is accurate, and it will ultimately fall to their responsibility to make sure that the payroll information that's submitted is accurate and that type of thing.
And she did clarify that this is correct for me, no 2019 tax return yet. So she just has, I'm assuming, has her 1099, but hasn't filed yet. So, hey, Jevaughn, is that you calling in?
Yes, this is Jevaughn. I've called in. My Zoom is not cooperating.
Got you. Okay, no, not a problem. And so let me see here. While we're on this topic, I'm gonna just take this and see if Jonathan can get patched back in as well. Jonathan, you may want to call in as well if you're having issues, if you can hear me. May I use the 2018 tax info for self-employment income in combination with the 1099 info for contract workers? This is from Richard.
I think that might be stretching the boundaries a little bit. For instance, if you have a Schedule C or a partnership return and you're trying to pull all the information from your 2018 filing and use that as the basis, that's not the accurate amount. The accurate amount is what would go on the 2019 tax return. So I think you should do everything possible you can to get an accurate accounting for 2019 and not just rely on your 18 data. There are some things that you might want to rely on, as I mentioned earlier, the profit sharing contribution or the pension contribution, which technically probably can't be done at this point in time. But the basic financial information and the Schedule C that might come out of QuickBooks, for instance, as most people use QuickBooks for small businesses, that should be the basis, what was actually entered in the financial statements for 2019.
Yeah, the criteria in the program is to use 2019 information as the baseline, as Mickey had referred to previously. And so if you submit 18, you may occasionally find somebody that will accept it, but most likely they're going to reject it, right? Because it's not in accordance with the guidelines of the program, and the lenders do have to comply with the guidelines of the program. So since this is a situation where the money is running out fast, don't delay your process, right? The more times you have to go back and forth with your lender to accumulate information, the longer it's going to take to underwrite your loan, and the less likelihood that you're going to be getting funding, certainly funding anytime soon. So please try to gather the information in the way in which the lenders need it so they can quickly and efficiently process your application.
Hey, Jevaughn, since you're on audio-wise, the question, this kind of goes back to the question that Cheryl asked earlier. What documentation are you guys accepting and needing for self-employment folks with 1099s or independent contractors as you take these applications?
Sure. The interim final rule allows us to accept either or for self-employed individuals. Our income, wages, 1099, and we are using the QuickBooks reports for 2019 along with Schedule Cs if they're available.
Gotcha. And it's 2019, correct?
That is correct.
Okay. All right. And so we have a couple more. Go ahead.
Can I add, the law does allow for someone to use a trailing 12 months from
T12
2020 back to 2019. However, if an applicant does that, they're required to make an adjustment to deduct federal withholdings for the covered period. My advice to people who apply is to just simply use the 2019 because you don't have to make that additional calculation. But if they submit information that is a trailing 12 month that includes the year 2020, it will not be automatically rejected.
Got you. All right, so I'm gonna get to some more questions in a couple minutes. Let's go ahead and take this next question. How do the affiliation rules apply?
I'll cover that. The SBA has pretty strict affiliation rules relative to entities under common control. So if you are an individual that owns or controls more than one entity, the question is, can one or more of them apply for the PPP loan? And are they qualified as a small business? The rules, the benefits are only applicable for businesses under 500 employees. So the affiliation rules are really intended to concentrate any companies that are under common control and have more than 500 employees as a group. However, they do not rule out the ability for each of those entities to apply for their own loan if they are filing under a separate employer ID number and if the total number of employees is less than 500. So it's really relative to the determination, are you a small business? And if you are less than 500 employees, then each entity, even if it's under common control, if it has its own employer ID number and qualifies, can apply for one of these loans.
And Doug, any addition to that?
No, that's absolutely accurate. That was the whole purpose of the affiliate rule.
Got you. And I think we have Jonathan on the phone. Jonathan, are you there?
I am here.
All right. As my grandmother said, we're cooking with grease now. We got everybody audio and video. Y'all just didn't want to be on camera. You didn't have to, like, do that. If y'all didn't want to be seen, just could have called in. I joke. So Jonathan, I don't know if you've been able to hear some of this. I didn't know if you just want to jump in generally from what you're seeing from a Frost perspective on some of the other questions as it pertains to data certification and what you guys are seeing as to documentation.
Well, what I'm seeing the most of, I'm getting correct documents, but what we are seeing right now the most of is filling out the application incorrectly. People are missing. There's a question on there, numbers 5 and number 6, where it asks you to initial, for example, underneath it. And people miss that mistake. Then question number, I think it's number 7, that they ask you if your employees are all residents in the United States. some people will just go down that and put all no's on all those questions, and so that'll of course kick out the application. And the SBA is requiring to be physically signed and not typed and initialed at those places. They're requiring a physical signature, physical initials, and so those are some of the common errors that we're seeing on the at least on the actual application itself, and will of course delay your application. So my advice would be is to take your time. Obviously, I know people are in a rush wanting it, but to fill it out correctly, double check it, make sure you check all the boxes that check them correctly, and then it'll make your application go much smoother.
And then going back to question that, I'm sorry, did I cut someone off?
Yeah, I'd like to add to Jonathan's comment. This is Jevaughn with Amegy Bank. One of the common reasons why applications are being rejected is the incorrect industry classification known as the NAICS code. The NAICS code, many people are taking it off their tax returns, and in many cases, the NAICS code standards have changed. And if they put that in the system, that will automatically reject it in the SBA system. So you can go to the NAICS code website and make sure that the NAICS code that you enter on the application matches your industry to ensure that that application will not be rejected.
Okay. Going back to a question that Carrie, our president and CEO of the chamber, asked, she said she's hearing from a lot of folks that they're having a hard time getting through to their banks to apply for the PPP. To our two bankers, our two CPAs answered that, but since you guys weren't on, I want to go back to that. Do y'all have any advice on how to get in touch with banks in general or yours specifically?
Well, if you have an existing banking relationship, reach out to your banker. This is a very busy time in terms of trying to juggle the number of requests that are coming through. So many banks have put the process online for you to start the application process. And I would recommend starting that application process while you're trying to contact your banker to make them aware that an application has been submitted on their behalf.
Okay.
Right, I would agree to that. Say, yeah, start the process online. That's going to be the best bet, because if you go right to your banker right now, as Jevaughn will say, we're getting flooded and bombarded with emails and phone calls, and so it's easier for them to apply online and than it is for me to say do it manually.
Got you. Okay. Quick question.
I realize other banks, I know the problem of it is there are some banks out there that aren't doing these at all, you know, and so that of course will keep Jevaughn and my phones lighting up as well when other banks aren't doing them and people need them. So that's also a challenge for us bankers.
Gotcha. So just to continue with the topics here, so we make sure we kind of stay on timing. I'll get to some of the other questions here shortly for those of you that have dialed in, and we appreciate you guys as well. Keep the questions coming. That's why we're doing this. So the next subject is reports to submit when using a PEO to process payroll. Who wants to take that?
I'll start off with this because we've dealt with this several times recently. A professional employer organization generally files its own payroll tax returns for all the employees included in that. So this is somewhat dependent upon who the PEO is, as many of them do things differently. So the first thing you'll want to do is a summary of the payroll that you might have them export to Excel or any particular spreadsheet where you can quantify the data by employee, limit it on compensation to $100,000 per employee, and use that as support when you submit the loan application. But usually a PEO files a 941 that includes all the wages for all the different employers for which it provides payroll services. So you're not going to be able to have its own independent, separate Form 941 or 940. You can generally make a copy of all the W-2s of the people in your employee in your employer base and make a copy of that to support the payroll. So that's generally what you want to do. We've had to do that, and it's very difficult. For instance, if you have 2 PEOs during the year, you got to download all that information, combine it in an Excel spreadsheet, make sure you don't go over $100,000 per employee, And most of these PEOs will provide a letter of substantiation to the bank explaining that they process your payroll and you're not going to be able to provide the 941s. Do the two bank, Jonathan and Jevaughn, do y'all have any experience with dealing with these issues?
Yeah, I do have experience with it, and you explained it well. I've also seen the Trade Association for PEOs publishing a letter that accompanies the PEO's letter, and we upload both of those documents to the file along with the supporting details from the accounting system for the applicant.
Jonathan, anything? You good?
Nope, nothing to add. You
Okay.
guys said it right.
All right. And so this is coming up in various questions that I'm looking at. I'm also looking at, for those of you that are on Facebook Live, we appreciate you, and I've logged on to be able to answer your questions as well. So clearing up the confusion on independent contractors, just in general. So those of us in the real estate industry, those of us in other industries where we have independent contractors. So who wants to take the first stab of kind of explaining up any confusion? I know we talked about it a little bit earlier, but as far as independent contractors.
Well, the real question goes to, can an employer include the money it pays to independent contractors in its payroll calculation? As we all know, the PPP loan is based on your average monthly payroll for 2019 with a couple of exceptions. So you calculate that by adding up all your payroll costs, but you should exclude, and the SBA is very specific on this point, you exclude anybody that you pay as an independent contractor. The idea is that they get their own 1099 and they can file for the SBA loan on their own based on their self-employment income. So generally, it's excluded in the payroll calculation for any particular small business. Anybody that they pay as an independent contractor should be excluded. Doug, do you have anything to add to that, or anybody else?
No, that's correct. There was some confusion when the original information came out on March 31st. The SBA had seemed to allude that you could include independent contractors along with payroll, but it was just poorly worded, and they cleared that up on the information that came out on April 2nd, that Thursday. So independent contractors are independent businesses, and so those people are entitled to file their own PPP application. They would not be included with the employers because they are independent.
Okay. And any comments, bankers?
Nope, that's right. That's what we're instructing our clients.
Okay. Hey, so
That's correct.
so from Facebook Live, Shantae asked, what should we put in the question about monthly payroll if there's no payroll? Unfortunately, we opened a store and operated ourselves and never paid ourselves. But we had overhead, rent, utilities. So this is a business and startup, sounds like, in 2019, open. In those first year, you're not taking a salary. You're just trying to pay everything. So she's asking, what should she put in the monthly income?
Well, first of all, it's a business that started in 2019. The payroll calculation is supposed to be done based on January and February payroll of 2020.
Okay.
So the question is, do they have a self-employment earnings? Was their net income from a Schedule C, a sole proprietorship, or a Sub S corporation? It really depends on how they're organized. But any business that started in 2019 can't use 2019 calendar year data. They have to use the average monthly payroll for January and February of 2020. So that's the way they have to approach it. Anybody else have any comments?
No.
I would say they need to talk to their CPA and get a good set of financial statements for January and February 2020.
It sounds like it. All right, so I'm gonna ask this question, then we can move on to the slides. If I successfully apply, Joe asked, how long should I expect benefits to last? If there's a limited money from the CARES Act, can we expect more money in future stimulus bills? Well, I guess the first question is most important. So.
Yeah, it's a great question. I think it's one that's on everybody's mind. I think everybody assumes that Congress will enact more money and will allocate more money for this. With everything, we're getting daily updates from NAGO and a lot of other organizations tracking the volume of applications. And this money will run out by the end of the week. I mean, from the initial allocation, and that's $350 billion. That's a lot of money. But Congress has already been talking last week about $250 billion more. And so I think that there will certainly be a second tranche of funding and perhaps even a third, depending upon how much longer we're all sheltering in place. And so, you know, time is of the essence. Just please get your applications in as quickly as possible. Get them to the lenders, let them make the application process take place for you. Once your application is approved, I believe there is a 10-day window that the lenders have to fund on those approved applications. And so time is of the essence. So please don't delay. Get your applications in.
And so going to that point, and you guys are about to cover the ADIL, we have a question from Justin that says, can you apply for both a PPP and an EIDL loan? I think we had that last time we got together. So.
Yeah, but it's a very complicated question. We had actually covered on the last slide, but since the question came up, let's go ahead and discuss it. You can apply for both loans at the same time. You cannot, however, have both loans outstanding at the same time. Most people are going to see that the PPP loan gets funded first, and it's smaller because it's based on generally, 2.5 times a monthly payroll number. Most of the amounts that we see are ranging from $20,000 up to about $650,000. The EIDL or EIDL loan is up to $2 million. So the question is, what happens if you get approved for both? Well, you can't have both of them come in at the same time. And you're mainly going to get the PPP loan first. Now, if you use the PPP loan for the base payroll that you're supposed to use it for, 75% for payroll and 25% for other qualified expenses, that can be waived. So the question is, you may want to decline the funding on EIDL if you have a substantive loan coming from the PPP, because if you get the EIDL and you accept the funding, you're going to have to pay off the PPP out of the proceeds. So it's a difficult economic question. If you get them both approved, which one do you take? You can't have them both.
Okay, anybody else on that question? All right, thank you, Mickey. So as far as speaking of EIDL, next slide is basically kind of talking about that program. I'm not sure who wanted to take that particular SBA disaster assistance response.
All the rest of the slides are really addressing the EIDL or the EIDL loan. I'll cover them and we can go through them fairly quickly because there's a lot of information. There's only about 20 minutes of time. These are loans that you apply for directly to the SBA as opposed to your bank. And as you see in the slides, the proceeds can be up to $2 million. And they don't have the limitations on the use of the proceeds like the PPP loan does. In other words, you can pay almost anything with these funds. The interest is 3.75%. The key here is you can't have any other ability to borrow anywhere. In other words, you have to have, generally on an SBA loan, you have to be denied funding from other sources. So that's generally one of the provisions. If it's a nonprofit, your interest rate is 2.75%. The loan repays over 30 years. Of course, this is determined on a case-by-case basis, but 30 years is the baseline, and there are no payments in the first year. Any other comments from any of the other panelists?
So unlike the PPP program, the EIDL does not have a loan forgiveness feature to it.
Good point.
So it is, in fact, a loan.
And it requires guarantees for those people who have greater than 20% ownership interest and collateral requirements as well. So it's more like a traditional loan program.
Many of the applicants may have been asked if they want to be considered for a grant up to $10,000. That grant, if you were in receipt of it, does not have to be repaid. However, if you are approved for the EIDL and you access additional funds, then those additional funds will become a loan.
That's a good point.
What we've seen,
Go ahead.
what we've seen in our loan applications is that we've given these borrowers who have received EIDL funds the option to refinance the EIDL loan with the PPP funds. So as long as you can qualify for the PPP and you have an EIDL loan already disbursed, you could potentially refinance the EIDL loan. The question now becomes, will your PPP loan become forgivable in the future? And for you to properly document loan forgiveness, you will need to certify that you did not use the EIDL funds for the same purposes as the PPP funds.
Good point.
What applicants need to keep in mind is that the loan forgiveness is based on a formula. 75% of the PPP loans need to be used, loan proceeds need to be used for payroll purposes. If you do not meet that requirement, then the loan will be repaid after the initial 6-month deferment period over the remaining 18 months.
Yeah, there's a two-pronged test that comes into that. The expenditures you make within 8 weeks after the date of funding determines an extent of your forgiveness, meaning you have to spend those funds on items that are intended to be used both for payroll, as Jevaughn said, for 75% or 25% for facilities, meaning rent or utilities or mortgage payments. And then there's another component that comes into play as far as head count. Is your full-time equivalent head count equal to or greater than what you had on February 15th or at least prior going into the funding of the loan program? So the intention here is that you use this money to make payroll and to provide for the facilities and to keep people employed. So that's really what they're trying to get at as far as the loan forgiveness. The more you do that, then the greater percentage you have forgiven. The less you do that, then the greater amount you'll have to repay over the period just indicated.
Good point. This particular slide and the rest of the slides address the EIDL loan. And the first two slides are really relevant to the online application process with the SBA. This is a loan that's provided directly with the SBA, and the application is made directly to the SBA. You go through you can do a search for the SBA's disaster loan website, and this list of information here is exactly what you'll need. It's essentially a two-part process. You fill out basic demographic information, including the business name, EIN, and everything you see on the screen right now, as well as your bank account number, which is on the next screen. But all the other supporting schedules that are normally included in an EIDL application do not have to be filed with this initial application. You can fill it out in about 20 minutes. It's not complicated, and you get an application ID number when you file it. The anticipation is that the SBA will come back and ask for the remaining supporting schedules later when they start processing the application. However, we've had a client file this form as early as the day before they were allowed to be filed, or that same day, and they haven't heard from the SBA yet. So they say it's going to be 2 to 3 weeks to process the application and 5 days to process the funds. But this is the basic information if you want to get on and file that you'll have to get together before you fill out that application. You don't have any other comments, or we go to the next slide?
Real quick, just for people out there, as we head into about 13 minutes left, if you have questions, feel free to put those questions in the Q&A forum so we can make sure we check them off. For those of you that are looking at Facebook Live, I am monitoring that as well. If you have questions, feel free to type those questions in, and I'll try to get those answered before we end today. So just want to kind of, and for those of you that are joining us on Facebook Live, this particular session is about the CARES Act and the all of the tools that the SBA and the CARES Act are providing. So we're in the middle of going over what the SBA has put out there as far as the EIDL loan and what are the requirements for that particular loan application. So just trying to rehash for those. Just noticed a flurry of people joining us all of a sudden. So with that being said, go ahead, Mickey, we can go to the next slide.
Okay. So one of the things you're going to have to disclose, you don't have to do this on the initial 2-page application, but you can be sure they'll ask for it when they follow up, is the amount of the loss estimated. And generally on the EIDL form, it limits the loss to real estate equipment inventory, and there's a category for other. And generally most people are going to be claiming a loss for a lack of earnings capacity or goodwill, future earnings. So these items now are not covered in the 2-page application that you file with the SBA, but these are on the EIDL application loan itself. So you have to give them, you should go ahead and fill this out, get the application, download it, complete the information so you'll have it available when the the SBA actually comes back and asks for the supporting details. Another item in addition to the estimated loss is your insurance coverage. And this includes business interruption insurance. Everybody should know that there's a process underway for people to claim, file claims against their business interruption policies for the COVID catastrophe. The other information they need are the owner's information, bank account, routing, and account number for the $10,000 grant. Anybody have any other comments on this slide? One key point you should consider if you're a nonprofit is who are the owners, because most nonprofits don't really have owners. And the application form itself actually addresses that by saying it depends on the structure of the nonprofit. Usually there'll be an executive director, CEO, or somebody that's basically in charge, and that's the person that should sign as the contact, but you should show an NA under the owner's data because most nonprofits do not have owners. And you can go to the next slide. The rest of these are on the EIDL application and what needs to be attached. And we're going to go through them fairly quickly so we can open up to questions. So these are the attachments. They did not get included in the initial 2-page application that you file online. And they are the most recently filed tax return and an explanation if you can't file it. For instance, you have extended your 2019 return, so you'll have the 2018 and a copy of your extension. A current set of financial statements, and that's a comprehensive set of financials, which is a balance sheet, income statement, and a cash flow schedule. Some detailed schedules are required. Schedule of monthly revenue for the current year and the prior 3 years. So it's a fairly extensive list of revenues to support your revenue assumptions or the fact that you've had a loss in earnings power. A schedule of liabilities, including direct notes payable and accounts payable. A personal financial statement of the owners, and the SBA actually has a form 413 on this that has to be attached or provided, and then a request for a transcript. Now, the bankers will know that right now you really can't get a transcript from the IRS because that form of the IRS is not working because of the COVID epidemic, and so generally now they're requiring an affidavit that you can't get this because the IRS is closed at the current time. Have y'all experienced that yet? Jonathan and Jevaughn?
I have not.
Yeah, I have not either.
Well, you can expect it. They're generally requiring a 4506, but you can't get a 4506 file. It's a request to transcripts from the IRS because the IRS is not in a position to respond to those right now. You can go ahead to the next slide.
All right, and I see your questions, guys, coming in. We're going to get to them. Just want to go ahead and finish this out so we can get to questions. Yeah,
this is something that's not required, but you should have it available if you have the ability to put financial projections together. A minimum of 3 years is going to be necessary to report or justify your loss in earnings capacity or goodwill. So I would do a projected financial statement for 3 years, which includes a projected balance sheet, a projected income statement, a projected cash flow. I would do it for the first year for each month, monthly for the first year, and then 2 more years after that. The more periods you can show, the more of a justification you'll see for a loss of earnings or the value of the business and all. And so that kind of covers the presentation on EIDL, so we can open it up to questions now.
Sure. And some of these questions are actually as far as the issues that you guys kind of brought up here. But so I'll start with Cheryl's question. Can realtors get unemployment now? Independent contractors, I'm assuming, is that what she is meaning? But
I don't know the answer to that question. Doug, have you dealt with that?
Yeah, my understanding is yes, they've expanded the criteria, but I don't know that for sure. I've not had anybody go through that process yet.
All right. And then we have a question, can we ask about unemployment insurance, or is this webinar limited to PPP? Go ahead and ask your question. I'll come back to it if you have employment, and we can possibly, if they have some expertise. If not, it definitely was more focused towards the PPP and the EDIL CARES Act loan. Can we quickly address nonprofits and how the act pertains to them? I guess in a little bit more broader sense.
As you saw early in the presentation, the only nonprofits that are eligible are 501c3 and certain veterans organizations. So if you're a 501c6, 7, or a trade association, generally they are not eligible. For everybody else, all the 501c3 is a church, a charitable organization, a Goodwill, something like that, scientific organization. They essentially go through the same calculations. It's based on average monthly payroll, 2.5 times the average monthly payroll, so you go through the same number. The disclosures are a little different. You have to show your total operating expenses for the past 12 months, and you have to show it by a fund, I think is what the rules call for. But generally it's the same process and the same payroll basis as for small businesses.
Okay. Anybody else on that one? Just nonprofits in general, bankers?
Yeah, these are tough to fill out the form, the application, because obviously there is no owner. So one thing that I would suggest is, or at least what we're having our clients do, is on the application form itself, on the first line of the ownership section, we're actually having clients put the name of the entity there with 100% ownership there with the address and the tax ID number again. And then we're having clients put the signer or whoever's the head of the organization on the second line of that application and showing 0 ownership and no other information needed on that person. But as of right now, that's what we're doing. I don't know what Jevaughn and you guys are doing, but it's a little complicated because SBA's typically never done nonprofits. And so it became complicated with the E-Train system that SBA uses. And so there has to be ownership. And so that's sort of the way we are handling that form. I'm working on 2 right now, actually. So.
That required disclosure I mentioned earlier is addressed. It says combined annual operating expenses for the 12 months prior to January 31, 2020 for all secular social services. And basically that implies if you have separate funds, you have to combine them all. And that's on the actual 2-page application that you file directly with the SBA. So you need that information together before you make out the application.
All right, we had a question from Darla. SBA stated yesterday that 10K was based on number of employees, i.e. if you have 6, you received 6K. Can this be confirmed?
Would you clarify that? I don't understand.
Darla is asking, SBA yesterday said that the 10K PPP loan was based on the number of employees. Her example is if you have 6 employees, you receive $6,000. Can this be confirmed?
No, I think there's some confusion. The 10K is the advance and grant from the EIDL. So the PPP is totally dependent upon your average monthly payroll for 2019 for those businesses that went into business in 2019, the January and February payroll. So the 10K, it has to do with the EIDL advance payment, not the PPP program.
Okay. Chris asked, the latest news on the EIDL is that they are affording only $1,000 per employee, but you have to prove that you paid each employee for the past 8 weeks. That was his general statement, so I'm assuming he's asking if that's true.
Yeah, I've seen nothing about that. It's not in accordance with the rules of the program at all.
Well, on utilization of funds, you're required to use 75% of the PPP funds for payroll, and that's where he's getting the 8 weeks and the 8 weeks subsequent to funding. So generally, the proceeds are primarily used to continue the payroll, and so basically, it's for a 2-month period past the date of funding. I think that's what he's referring to.
Got you. And then let's see here. Question. Daryl Ross says, I received the same email regarding the 1K per employee up to 10K as well, just as an addition to that. And then question, I worked July 2019 to March of 2020, laid off 3/31 of 20. I filed unemployment and they only counted July 2019 to September 2019. This goes back to our unemployment question from earlier. They said I didn't make enough for unemployment. Why did they only count 3 months?
That I do not have any idea.
All right.
I'm not an unemployment expert.
Yeah, Chris, that's beyond the scope of this webinar. I went ahead and asked it just in case we had somebody with some familiarity to that. So I would send you to the unemployment experts on that one. Let's see. Can you use 100% of the PPP funds for payroll? Felicia asked.
Yes.
The answer is yes.
Yes.
Absolutely.
Yes. Yes. All right. I just want to make sure I'm capturing everything real quick. Chris said, thank you for attempting to answer the unemployment question. No problem, Chris. We're here for you. Oh, well, kind of, I guess. So I think we have covered every question that I've gotten, and it's right at 1 o'clock. Any closing comments or things that, since you guys are on the phone, I'll call you individually. Jonathan, any closing comments that you want to leave with folks today?
Yeah, I would just say that anyone that applying online or through their bank also in these tough times, I know it's not easy to be patient, but we are asking customers and people to be patient. The banks are just getting flooded with these, and we're doing our best to go through all of them. And but it is very challenging, and since it's so quick and it's happened just in about a week's time, and but all the bank, if they get their information in the banks are working on them. It's just unbelievable amounts of applications, and so patience is tough, but hopefully if you have a good bank, they're working on it for you.
Thank you, Jonathan. Jevaughn?
I'll agree with Jonathan's comment. We were basically given a week to build a scalable process to take care of our existing customers and new customers, and we're doing the best we can to build that process so we eliminate or reduce the number of errors that will occur during an application process that may prevent an otherwise qualified applicant from not receiving their PPP funds. It's very difficult to tell people to wait and be patient when they have pressing needs. But I think what you can understand is that everyone's interests are aligned, and we're doing the best we can to get these funds approved and dispersed to our borrowers within a week.
Thank you, guys. Doug, any closing comments?
No, just please continue to get your applications together as quickly as possible. Make them as complete as you can so that there's not time wasted going back and forth between you and the lenders. This program will run out of money by the end of the week. Everyone does anticipate that there will be additional funding, so it will continue on in the weeks ahead. So even if you don't think you can get it in by the end of the week, continue to work on it and get it in as soon as you can. There will be, I believe, additional allocation of funds.
All right, and last but certainly not least, Mickey?
I would echo a comment that Jonathan made earlier to be very, very careful when you fill out those applications. And reach out to the bank that you're working with, reach out to your accountant or your CPA. Don't just blindly rush through and answer the questions. The one he made reference to was a question that says, usually you're expecting those answers to be all no, But in that one particular instance, I think it's question number 7 on the application form. Are all your employees employed within the U.S. And the answer to that would be yes. Not enough. So you got to be very, very careful in the application process. Remember, you're applying to a bank to be a collateralized loan for the SBA, and the SBA is very much a stickler on the form of the content of the application and the process. So just be very careful when you're going through that process.
Gentlemen, I want to thank you on behalf of the Fort Bend Chamber, on behalf of, I'm a small business owner as well, for taking your time, especially, well, both sets, the CPAs and the bankers. I know bankers are getting slammed with applications right now, so taking an hour out of your day to help answer is just, we really thank you for that. And for our CPAs, I'm sure you're getting slammed with questions and document requests to put these applications together. So we really want to thank you on behalf of Fort Bend Chamber Business and Professional for doing this part two. My limited French there. And so with that being said, for those of you that are watching on Facebook Live and on Zoom, you can see we have put the contact information for Jonathan, Jevaughn, Doug, and Mickey there. If you have questions, feel free to reach out to them. They have generously spared their time to answer questions and to go over this as well. If we see the need, as Doug mentioned, if there's more money out or different things that come out as it pertains to the CARES Act or clarifications, and it's enough fodder to do this again, then we'll try to put this together one more time, or how many ever times we need as we go through this pandemic together. So again, that's their contact information. And I just want to remind each of you that a lot of the information as far as the SBA is located on the SBA.gov website, the SBA.gov website, and that's it on that particular slide. And then our next webinar. So we're doing these for those of you that are watching for the first time on Tuesdays and Thursdays, just trying to provide content for you guys to try to get through this particular just different time. I mean, there's just no other way to put it. So our next session will be Thursday at noon. Thursday at noon is on self-care, prioritizing your mental and physical health. I, again, as your business and professional chair on the Fort Bend Chamber board, will host this self-care. We have Dr. Sterling Carter, who is not only a Willow Ridge High School graduate, shout out to Willow Ridge because I'm a Willow Ridge graduate as well, but also he is a physical therapist. We have Coach Cal Adams, I Love Kickboxing. And then we have Heather Lambert, Clear Hope Counseling and Wellness Center. So we've been talking about your money. Now we want to talk about your mind in these times of quarantining and family and things of that nature. So this is just really good content. Before we log off, I want to compliment and commend Carrie Schmidt, Juliet, Ryan, Paige, Stacy at the Fort Bend Chamber. They are doing a awesome job of putting these sessions together and just trying to serve and switch the Chamber's focus to assisting not only the members of the Chamber, but those in the community at large. And as a member of the Chamber, as a commercial real estate broker, I wanted to let you guys know we appreciate you. We really do, putting that stuff together. So again, we thank you for joining us today. We hope that you will join us on Thursday and look for additional content. And finally, on the Fort Bend Chamber website, you can not only register for events, but you also will be able to see within the next 48 hours a video of this particular webinar and the previous webinars that we have done. So if you have and want to re-watch this, you can. For those of you on Facebook Live, you can go to the Chamber's, Fort Bend Chamber's Facebook page to see the previous webinars as well. And again, we just thank you for joining. So I will bid you guys farewell, and I hope that you guys are staying safe, healthy, and quarantining. So thank you guys for joining us. Thank you, Mickey. Appreciate it, Doug.
Thank you.
All right.
Bye.